Hi, Thane and Cameron here from Mulcahy & Co Financial Planning with another market update or a bit of a market summary for you. So the topic that we're going to cover today, which is on everyone's lips, is franking credits and what's going to happen if the Labor government get in or when they get in, and then how's that going to impact prices of shares, so particularly those that are paying fully franked dividends, and what our feelings or thoughts are with that. So I'll throw it over to Cameron to start with, and we'll go from there.
Yeah, well, as you said, it's looking more and more likely the Labor Party is likely to get in this year into government. Now, if that's the case, Bill Shorten has pretty much told the country that he's going to be cutting franking credits. Now, this really affects the pensioners who rely on these franking credits in terms of their dividends, in terms of their income, to get that cash back out of that.
Yeah, particularly those self-funded retirees.
Absolutely. So that's going to hit pretty hard. So all of a sudden, an 8% fully franked dividend for these pensioners are going to come back down to a 6% dividend or whatever, which all of a sudden other assets, other income generating assets might look just as attractive as bank shares. So maybe we've already seen some of the stocks factor that in terms of the high yield, fully franked paying dividend type companies that have come off recently in markets.
Yeah, well, that'll be the interesting thing, though, won't it, in terms of valuations? I suppose we touched on it off camera. Was just, well, you've had the Royal Commission, so how you've seen share prices come back, particularly with the banks who do pay fully franked dividends. So then you've had, I suppose, pressures of, lending demand or borrowing demand from Australian residents. Is that going to come back, slow down? So then how much of that's been factored into the share price already reduction? And then if you get another issue or event such as franking credits being cut, then does that mean that the share prices have got to fall further again? And, I suppose particularly for my thinking is that, yes, it would. You've obviously had the other two events. I don't think that there's been too much talk about it at the minute. And, I suppose Labor isn't into power yet. So I think that there'd be still a little bit to wash through with it. But yeah, I suppose the simple analogy is that, in the last 5 years, you've probably seen a lot of people get out of cash and fixed interest and chase the higher yields within your Australian share market with the banks and Telstra and AMP, the like. But if you've been used to getting a franking credit at the end of the tax year, then I suppose you've been effectively working on that 7%, 8% discount rate. So if you're not going to be getting that anymore, then you've got to expect that the face value or the share price would fall a bit further.
And that brings in other assets like bonds that we've been pretty positive on actually recently as an alternative to just relying on bank shares as your form of income through the dividends. So all of a sudden you don't get the franking credit in a bond, but all of a sudden if you're not going to get it in the bank stocks anymore, your bond is typically a safer investment as a fixed interest product than outright owning bank shares as well. So and as you know, we've been pretty negative on the banks because that they have come off recently. We have seen all these problems that have now playing out. But all of a sudden it opens up a lot of these alternative investments to chase these returns.
Oh, definitely, yeah. As you say, if you talk about corporate bonds where you can get probably 3.5%, 4%, 5% as an interest rate, well then that's equivalent to your dividend yield. And yeah, I suppose as we understand, like bonds are much safer and secure than an equity based where you're relying on companies to make profits to be able to pay you that dividend. So
yeah. And look, as we spoke about earlier, we are still pretty cautious with markets. We have seen a lot of volatility over the Christmas period. We've seen markets, globally and in Australia sell off pretty heavily. In the last 3 to 4 months, we're still down plus 10%, and obviously the banking sector's been a very big part of that. So our philosophy still remains, the same to not take on too much risk. Don't just try and chase these high yielding stocks, and bring in alternative type investments, which is your precious metals and things like that, which have actually hedged out really well against the fall in the banking stocks. So it's all about diversifying the portfolio, not just primarily relying on fully franked income, but looking at other assets and where we are in the market.
Yeah, definitely. And sometimes that's what you see for clients that haven't sought advice or that before. But I suppose first port of call is to protect capital and then work from there.
Yeah. So a lot of the question I have a lot is, where to now? Is it going to keep coming off? The crystal ball doesn't sit in front of us. However, it's pretty likely there's still going to be a lot of volatility in the market. The US market, which is really leading everything at the moment, it's just up and down. You see up 3%, down 3%, on a daily basis, which is just crazy.
Big variances, yeah.
So this will probably play out at least over the next few months. So we expect this to continue. But in terms of holding safer type assets is the way to go. Look, and there will be a time to move back into more banking type stocks and things like that. But it's still a bit early yet. There's still a lot of things to play out. There's still a lot of negativity in the market. And we'll just wait and see what plays out until this volatility sort of calms itself down a bit.
Yep. So as you can see by our comments from not only now but the last couple of months, is we're maintain that balanced allocation and be cautious of volatility and the ups and downs, and that it will carry on. But if you have any further questions, by all means, feel free to give us a call to discuss your portfolio or any issues that you want to cover off on. So once again, thanks for listening. Talk soon. Bye.